Well, hello, and welcome back to the Daily Hunt for Multibaggers. I'm Ethan, your guide to market growth and opportunity, and I'm thrilled to be here with the one and only Brooke.
And I'm Brooke, keeping us grounded with the data and risk management. It's Monday, November 10th, 2025, everyone, and we have a bit of a special episode for you today.
That's right. Typically, if our AI doesn't flag any standout opportunities for Sunday's episode, which I gotta say, last Saturday was extremely quiet on that front, we'd usually dive into a review of the past week's suggested stocks. It's our chance to see how those predictions panned out.
Exactly. But as some of you might recall, we hit a few technical snags last weekend, which unfortunately blocked the publication of that Sunday review episode. So we're a bit out of order today, but we didn't want you to miss out on the valuable insights.
Absolutely not. So, what we're doing today is taking a deep dive into the performance of the stocks our AI flagged between October 27th and October 31st, 2025. It's a fascinating look back at a very dynamic week, and there's definitely a lot to unpack.
Indeed. It's a prime opportunity to see how our AI-generated insights held up against real-world market movements. And trust me, the numbers tell quite a story.
Oh, they certainly do. Brooke, I've got to kick this off with a shout out to our top performer because, wow, we're talking about Eli Lilly and Company, ticker LLY. Remember that buy signal on October 31st?
I do, Ethan, and I'm looking at the numbers right now.
Well, for those of you who were paying attention, Eli Lilly, which came out with a first mention price of $846.41, soared to a highest price of $973.33. That's a whopping 15% increase from its initial mention. And even by yesterday's close, it was still up a fantastic 14.24% at $966.97. That's what I call growth. Pure potential right there. It took about 10 days to reach that peak, showing some really steady upward momentum. Perhaps some positive drug trial news or new product pipeline updates were fueling that,
It certainly shows strong positive momentum, Ethan. A 14.24% gain is significant, especially considering the broader market indices, like the Dow and S&P 500 saw slight declines in the same period. This suggests company-specific catalysts were at play for Eli Lilly, which is always an important KPI to monitor. However, we also saw quite a few, shall we say, less stellar performances.
That's one way to put it, Brooke.
My eye immediately goes to Beyond Meat, ticker BYND. This was flagged as a speculative gamble on October 27th at 1.93. Now, it did see a quick jump to $2.14, a 10.6% increase, which happened just one day after its mention. But then, well, the bubble burst pretty quickly.
Yeah, that one was a bit of a roller coaster.
Roller coaster is an understatement. By yesterday's close, BYND was trading at 1.34, representing a drastic 30.74% decline from its initial mention price. That's a significant erosion of value in a relatively short period. This really underscores the high-risk nature of a speculative gamble insight. While it offered a quick, albeit fleeting opportunity for a gain, the downside proved to be much more substantial. It highlights the importance of very tight risk management and understanding the volatility associated with such speculative analysis.
Definitely a stark contrast, isn't it? One showing incredible sustained growth, the other, well, a steep learning curve for those who jumped in.
All right, let's quickly run through the rest of the list for that week because there were some interesting trends.
Sounds good.
Starting with Nebius Group NV, or NBIS. This was a cautious buy on the 27th. It had a brief surge of 7.69%, but then settled down quite a bit, closing yesterday at 109.94, a 10.10% drop from its mention.
Then we had Apple, AAPL, a buy on the 28th. Pretty steady, It saw a modest peak of 1.55% and is still in the green by 0.26% at 269.36. Solid, but not a rocket.
Novo Nordisk, NO, another buy from the 28th, unfortunately saw a significant dip. After a very minimal gain, it closed down 12.67% at 45.96. That's a tough one for a buy signal.
Qualcomm, QCOM, a buy on the 28th, had a small initial bump of 1.72%, but ended up down 4.46% at 171.54. It slipped a bit, but not dramatically.
Meta Platforms, META, also a buy on the 28th, showed a quick initial rise of 1.17%, but then suffered a substantial 15.47% decline, closing at 631.77. That's a concerning pullback for a major tech player.
Now, Alphabet, GOOG, also a buy on the 28th. That was a good one. It peaked at an 8.61% gain and is still up 8.42% at $290.59. Strong performance there, showing some good market commentary coming through.
Microsoft, MSFT, a buy on the 28th, unfortunately went in the other direction. No peak gain, and it closed down 7.26% at $500.
Moving into the 29th, United Health Group, UNH, another buy, also slipped, down 11.14%. And Nokia, NOK, which was also a buy, ended up down 8.11.
Then we had SoFi Technologies, SOFI. That one was relatively stable with a small peak and a slight drop, closing down just 0.96%.
Applied Digital, APLD, saw a small gain of 1.08% before sliding down 11.47%. And TeraWulf, WULF, a speculative gamble, initially gained 3.78%, but then ended down 8.87%. On the 30th, Core Scientific, CORZ, another speculative gamble, actually saw a decent peak of 12.96%, but pulled back to a 4.9% loss. This illustrates the high volatility we often see with speculative analysis. Finally, for October 31st, besides our star LLY, we had Coinbase Global, COIN, a buy, which dipped 10.48% after a small initial gain. Amazon, AMZN, a cautious buy, actually finished up 0.75% after hitting a 4.04% gain earlier. Not bad at all.
And rounding out the week, Reddit, RDTT, a speculative gamble on the 31st, didn't show any initial upside and closed down 10.14%. So a very mixed bag overall. Our overall average return for all insights ended at negative 6.85%, while the optimal average, if you sold at the peak, was plus 3.89%. This shows just how crucial timing and precise market commentary can be.
Wow, what a week that was. It really demonstrates the incredible dynamism of the market, doesn't it? From Eli Lilly's fantastic run, showing strong growth potential, to some of those more speculative plays that, well, certainly kept us on our toes.
Indeed, Ethan. This review of the late October period really highlights the varying outcomes possible even within a short time frame. It's a powerful reminder that while some AI-generated insights can identify significant upward movement, others may point to opportunities with high risk that require very careful consideration and active management.
Exactly. And for those of you looking at these numbers, remember this has been a look back at historical data. It's fantastic for learning, for understanding market commentary and patterns, but it's crucial to understand that past performance, even with AI-generated insights, is not indicative of future results.
That's absolutely right. The content we provide on the Daily Hunt for Multibaggers is generated by artificial intelligence, and while we strive for accuracy, AI might make mistakes. These are speculative analyses and market commentary, not personalized financial advice. Therefore, listeners must always conduct their own thorough research or consult a licensed financial advisor before making any investment decisions.
Your financial future is in your hands, folks. Use these insights as a starting point, but always verify and consider your own risk tolerance.
Thank you for joining us for this special review episode of The Daily Hunt for Multibaggers. We'll be back soon with more AI-generated insights and market commentary.
Until next time, keep hunting smart.